How in the world do you know what your filing status is? Let's talk about that next. Hello, I am Alison Eddings. I am a CPA in private tax practice with Top Dog Tax and Accounting. And I want to talk to you a little today about filing statuses. But first, let me ask you if this content is useful or helpful or encouraging or stuff you think other people would benefit from, please subscribe, like, share this video. That pushes it out to more people. So now that that's out of the way, filing statuses. So a lot of taxpayers are confused, and I see it a lot. People ask the question a lot: is it better to file married filing joint, married filing separate? And inevitably they ask me this question because my husband made a lot of money. Should I file separately from him so I'm not taxed as much? That's not going to change a thing. It really very rarely changes anything. In fact, when I was in school, when I was in college, which was like, I graduated 20 years ago, so it's been a while. I remember my tax professor saying, there's never, ever any reason for filing married filing separate. That's changed, so we'll cover a little bit of that. So the filing statuses are single. That one's kind of easy. Head of household, get a lot of confusion on that. You cannot be married and be head of household. Married filing joint, married filing separate, and qualifying widowers. That's 5. Single, head of household, married joint, married separate, and head of or qualifying widow. So single is pretty easy. It means you're not married, but it could also mean you're a widow. So let's say in the year 2021, your spouse died. Are you filing single or are you filing joint? That was probably a bad example because in 21, if your spouse died, you'd file with your spouse because he's still got to file. But let's say that your spouse died in 2020 and you're filing your 21 return. It's possible that you would have to file single. Depends on if you have dependents in the home. I don't want to say children because it matters if they're dependents, because it could be somebody else could be your dependent that changes your status. You could have a niece or nephew in the home that's your dependent that would make you eligible to file as a qualifying qualifying widow. So that is a status for someone who has lost a spouse but is still supporting a child in the home. Or I shouldn't say child, I just said that, a dependent in the home. So single doesn't just mean that you're 23 and not yet married. You could be single under other circumstances, but single persons do not have dependents in the home. And don't hear child when I say dependent. It just means dependent. So dependent could be, like I said, a cousin, a nephew, a foster child, something like that. But if you don't have anybody else sharing your home with you and you're all by yourself in your apartment or whatever, you're probably single. Head of household, I'll cover that one before we talk about married joint, married separately. Head of household, you have to be single. So you can't be a married person and filing head of household. I've seen people do this before. You can't do that. Although I have covered in my other video that I have more than once amended returns for women whose husbands took off and they never got divorces, but they've been gone for years. And the only reason they don't have a divorce is because they don't have an address to serve them with, right? Like, they'd much rather be getting child support and have a divorce than just have this guy ghosted them. So in that situation, that would be a head of household situation, because the IRS considers you to be, you have to not be married to file head of household, but they consider it not married if you're not living together too. There has to be certain standards met for it to, I'm not coming up with the right word for that, but certain standards met for it to be considered married. So head of household means that you're basically supporting a home with dependents as the only adult. That's what head of household means. Married filing joint, married filing separately. So obviously they've got married in the name, so you're married. At what date do you have to be married? By December 31st. So let's say you were single all year long. Gosh, you were even in college. Let's say you were even in college. I graduated in a December time period, not that I was a dependent, but for example, say you were a college student all year long and your dad was supporting you and your mom was supporting you and they were paying your tuition, and then you graduated like December 15th and you got married December 31st. You were not their dependent for that year, because you cannot be married and be a dependent. So even though you were, you might hit all the qualifications that you lived with your parents more than half of the year, they provided more than half of your support, you met all the other qualifications for being a dependent. If you got married before the end of the year, you're married. So whether you file married separate, married joint, you're considered married. Now, whether it's more advantageous for you to file married separate or married joint, to generalize, you rarely would have benefit from filing married filing separate, but that's a generalization. Don't go saying my CPA or I heard it's not that way anymore. It used to be that way. Long time ago it used to be that way. And I think the example that they gave when I was in college was that Michelle Pfeiffer movie where she was like married to the mob or something. They're like, yeah, so if you're married to somebody and you know that they're up to no good, you'd file married filing separate, not for the tax benefits but for the legal benefit, because you don't want to sign that return that has your spouse's where he's attesting to, yes, I do not have any drug dealer money income, and you don't want to sign that, right? So that used to be the standard, because you lose certain benefits. There's certain credits that you lose when you file married filing separately. So typically you're not going to be better off, especially if you have children. However, like in 2020, we had this situation where, and this was all written up so last minute, it was in tax code that was adopted 3 months into the tax season, but that if your income was below, was it $150,000, that you could exclude the first $10,200 of unemployment income. Well, that created a circumstance where if you filed jointly and it tipped you over that point, you might benefit from filing separately so that you would get that exclusion on unemployment. Now, unfortunately, you can't go back and amend a joint return to change it to separate so that you can take that exclusion. So people that filed jointly prior to that and then found out they could have filed separately just missed out on the tax benefits of not claiming the unemployment, the first 10-2 of the unemployment. But sometimes there are situations like that where it does benefit you to file married filing separate. As a general rule, you're not going to come out better. Typically, that unemployment issue aside, typically the only time I see a benefit for filing separately is with my clients who are doctors and attorneys and who still have debt, student loan debt, and they get forbearance on their student loans. They know that they're not going to get a better tax situation. In fact, oftentimes they pay more in tax, plus they have to pay for the additional return to be filed by me. So they know they're paying out more, but in the long run they pay less because there's forbearance on their student loans. So that might be a situation. Or possibly, being able to deduct the student loan interest, which is not a huge deduction. It seems like it is, but it really kind of doesn't by the time. It doesn't really move the needle that much to have to pay to have a second return done. So, long story short, you're not really going to see a huge tax benefit from filing separately versus filing joint. You can't file head of household if you are married. If you're single and have nobody else sharing your home, that's kind of a slam dunk. Qualifying widower, that one is just a short term status for the first 2 years. Your first year that you lose a spouse, you have to file jointly. I mean, you file married filing separately and have them file a separate return if that's how you want to handle it. Don't know that it would be beneficial for you to handle it that way, but hopefully that helps you understand a little bit about the different filing statuses. So if this content was helpful, useful, informative, please do subscribe, like, share, and have a great day.